Hey guys, how are you? It's the Crypto Sniper. Yes. You thought I'd disappeared. No, sir. We've been so busy. We've been so busy in the traditional markets. It's been a thriller. It's been a spiller from Manila. Yes, we've had a great time on the longs on the USD ruble, the shorts on the oil, and various other things that you can follow on the Market Sniper channel. I'm here to talk crypto with you today. Okay, so number of questions people will be asking. Given the extent of the sell-off, where are you with your macro position on Bitcoin that you've expressed? I will answer that. What is your take stroke opinion on the momentum? We had our harshest selling day on Bitcoin in a single day that it's ever had in one single day. And it was brutal. And what do you think happened? Who do you think's behind it? Why did it happen? And then I also want to deal with a few debunkings. A lot of people saying, yeah, Bitcoin's all correlated with the S&P now. And nothing to do with gold and silver. And in fact, I'm going to reassert more than ever that rather than this antagonism that Peter Schiff likes to encourage between the anti-fiats, I call them the anti-fiats, that's the precious metals, and then our e-gold equivalent, that is the crypto market. In actual fact, they will suffer the same things at the same time. However, this is where Peter Schiff sometimes loses track of things, is he doesn't recognize that Bitcoin is always the higher beta. It's always got the greater volatility. So if gold nibbles its way down, silver will have a proper push down, and Bitcoin will take a tumble like the rumble in the jungle. And that's what happens. And that's just an element of volatility. This is the most volatile instrument because the concept of valuation is very difficult to put your finger on. And as a result, people don't know quite how to value it. Plus, it's done an immense amount. So anything, quick, minor, short lesson, something that goes over 10 years up 15% and has a very flat line, draw a line, Francis. Help the guys understand. If you have something that has a growth trajectory that's exceedingly flat, low, and deemed very safe, say bond instrument in a normal market. These are not normal markets. The variance in around these things are actually very low. So if I use purple, the instrument may well just do something like that. So if the overall growth 10 years ago and where it is today, you'd go all the way along, in and around there. When you're dealing with an instrument that goes up quite strongly, let's take the NASDAQ, for example, and let's go with a rather more princely purple that's gone exceedingly high over the same period. You'll find the instrument's glide path and the degree that it moves during that same period will be potentially a lot more volatile. Bear, lag, moon, really deviates, big bear, big, oh, misery, basing out, moon, bear, like that. So the variance in around the glide ratio, then you get Bitcoin, guys. You get Bitcoin, and that angle of ascent, we call it the line of efficiency in HVF method. You'll learn it when you enter into a trade and where you close. If that is like that one, wow, boy, do you get a path. What you actually get is, if let's just say that's the $5,300 level, bearing in mind Bitcoin started at $1 around 10 years ago, what you'll actually have is, whoops, I've got an arrow, is you'll have a much even more volatile journey path. So you'll go boom, down. Big bear, 18-year bear, room off the screen. 2018 bear, non-stop, and another spiller, and then boom, 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 and then really. So the extent of the volatility just gets bigger and bigger. So much so that you can actually have an 85% collapse in this underlying, but actually it's still in a macro bull from inception. In other words, $1 to, let's say it was $3,200 or $3,100, even though it's sold off 85% and is in a bear market in terms of this time frame from inception, it's a super macro bull. It's just having incredibly bigger oscillations to the mean. The reversion to the mean journey sees a much farther differentiation from the mean to the upside that people forget that there could be such an extent. Anyway, that's a bit of an explanation about volatility. So let's start answering some of these questions. First of all, let's deal with the question of, is our macro view of this being a super macro continuation pattern foiled now? No, it isn't. Not at all. So at what point does it become foiled? Well, there's a straight, simple answer. Every level has an invalidation. It's been our priority view that you're in a continuation for upside on what will be an extensive push up to come. But this is not tomorrow. We've said you've got to do 3 distinct impulses. And in actual fact, we thought there was a possibility early. And generally, you're always going to be early. And it's not a bad thing to be early. It can be expensive at times, but at least you don't miss the trade. So at that point, we thought we probably had, on balance, our probabilities are low too. But we did keep in mind that you could trade through it. You could trade right the way down. We said at one point, one of our scenarios was 4.5, which was kind of capturing this pause level, or $5,000, I think it was. But we said you might trade through that. And I remember saying 4,500. It was not, let's be clear, our highest probability view. This has surpassed expectations on the aggressiveness to the downside and also the extent in terms of how far it went. It wasn't our high probability view that it had this, but the possibility always remained, and it doesn't do anything. So why has that happened? Why has that happened? In hindsight, I feel I should have been far more open to that possibility. In actual fact, what's happened is Bitcoin didn't exist in 2007-08. Gold and silver did. And this is where I keep referring to the anti-fiats. And people can forget about the S&P. I will debunk that now, the correlation with the S&P, just because there have been 1 or 2 periods where they have done the same thing at the same time does not mean they're highly correlated. All that happens is when you get extremities of fear, which is where we are now, you're going to get a global economic growth that across the globe is going to fall an incredible percentage, quite possibly 30, 40%, maybe even half. Travel's cancelled, everything's stopped, everyone stay at home, stop the clock, nobody's doing much productive, supply chains are shut, shops are shut, revenue's not coming in. Watch all the bailouts for all the industries that'll come. That's tax on you, my friends, in devalued fiat. So the key thing about gold, when you look at it during and it's difficult to talk about the current Bitcoin association without bringing precious metals into this. So the key thing is gold in of itself at $1,003 fell to 689 during 07-08 on the fear. So people who had bought the insurance of gold but were highly leveraged in the equity markets had a dash for cash. They had to sell everything to get in cash. They were being liquidated. Too much financialization, too much leverage, too much fear. Therefore, everybody needs liquid cash. The first response is always cash. Then they might park some of that cash in money markets or bonds, etc., which is why bond yields have dropped, etc. Now remember, the common instinct, everyone has had this mentality, crypto is a different world, and you must analyze crypto. We do 360-degree analysis. We always say it's the same person. Markets are derived by people and their fear and greed. The footprints in the sand that they leave is due to their activities. You cannot cause them immense pain. Speculators are speculators and speculate in many markets. institutions, individuals that work in high-risk environments that will be longing, buying options, just saying that's the big easy to go long the SPY, buy the damn dip, and have been doing for 5 years, been getting positive affirmation for negative behavior for 5 to 10 years, just been adding the leverage, buying the Ferrari, also speculate in Bitcoin because they are speculators. And the common denominator that ties crypto and all the other traditional markets is the human being. Is the human being with his greed and fear. And when he's in pain, he needs to sell. He needs to get liquid. And guess what? You can liquidate Bitcoin quicker than you can sell your house on the open market. This is what happens. So actually, you've had a supreme degree of leverage. And I'm going to talk about whether all of this is the retail Bitcoin guy or whether it's the institutional guy. But let's have a little look at the technicals. Now, I've intentionally used Gemini, not because it's a great exchange and I want man love of a transgender nature with Winklevoss twins, not at all, because I needed a clean chart and I needed something really separate from my Bitfinex, which is very well annotated, and I don't want to lose any of those lines, but it'll overwhelm you. So the point is, on the Bitfinex, it ran 7.4 exactly. On this one, it dipped through 7.4. Now, 7.4 was you collapsed into and broke the 7.4 with momentum. You bottomed out, resisted just run, key levels of significance. You'll learn more about all of this and how we apply them in HVF method, the Hunt Volatility Funnel. If you want to find out more, links below. Then you dipped back, spinning tops, low volatility. So the big volatility up top here, where you were 20,000 and it was going all super moony. The big volatility up here, which is big wild swings, and the pain had a final twist of the knife. Mike Novogratz was calling that the bottom. We disagreed and said it's going to sell off, and then broke down. And I will tell you why I reference Mike. I haven't got an axe to grind with him, but it is things that he is saying that I don't agree with again. So I bring him in. So you continue to be just run, back down, just run many times. This was the key level. It's your 4K. That's that blue number there that I'm showing you. Key level of significance, just run just about on all the exchanges. In essence, the volatile break, and this had high volume, we'll look at an indicator that'll prove to you that there was some big volume coming in there. And we'll do so across currencies as well. So I've got some interesting things to show you in this clip. But that was a big key move, and then we blasted through that previous legacy resistance, which was a core zone. We then took a rest after that, and then we went for the upside. So now when I've done volume by profile, guys, many people will be saying, well, this is a very low slung, hanging deep. You know, the lows are very low and flat relative to each other. You got 3-2. Even if this is the low, which many will say it isn't, I think it is, but we'll come back to you on that and we'll tell you why more. This is pretty flat, while the selling across the top is pretty sharp. There's a big angle of descent here that brings you from 20 down to 14. So there's a lot of compression across the top on our macro structure, and there's only a minor climb that we've made since the last major low of the bear market. So you're at 3.2 here, and you're at literally, in some cases, back in the threes, the upper threes, or the 4K on the nose if you're in Bitfinex. So that's quite a big sell-off. But we are talking about the 2008. Bitcoin never experienced 07, 08, guys. Bitcoin never experienced it. You would never have seen how far it fell, and you have no basis of comparison. And this, in my view, will prove to be bigger than 07, 08. It's a bigger wind-up. There's no doubt our control structure friends have very interesting things planned for us as a result of all of what's coming out of here. There's going to be so many more twists. This period is going to be referred to in the same way of the great financial crisis, maybe even more so. I'm already sick of hearing the word coronavirus. I don't want to hear it. I don't even want to mention it. I'm coronavirused out with this whole narrative already. I'm done with hearing it. But believe me, you're going to hear it. You're going to hear it as plenty. Anyway, so what happened? For me overall, this is kind of broadening. So you've got a big pole to the upside, and then you're clipping the tops on this weekly time frame. So we always refer to the big time frames when you want to get sense. You want to get sense, you start from the top down, and then all the lows pumped past that. Good support there. I should change color because I'm using the green. So change him. Where did he go? I hit him in the corner now. Now I can't get him back. Come back. All is forgiven. Switch him off, bring him back. There we go. There he comes. So I'll use the red. So you can see there, a long period of grinding along these lows here. We called for that 6 and 8 bottom before you'd have a big rally. That happened there. And you've got your inverted head and shoulders. You made that target there. You carried on up. We called for the 10-5-2-2, which happened to get that high, and the top of an inverted funnel that gave us our original target of 6-8 down there. And that's literally where it stopped, and then down. This was a head and shoulder, by the way. I'll show it to you on a smaller time frame if you can't see it just yet. That performed to target, and then it ran in such a spill that you overshot your descending basing line. This is what we call this. You'll learn about it a whole bunch more, as well as your descending capping line, which is in a megaphone. So there's a broadening. What does the broadening in essence mean? When you're going down and you're broadening, it means you were in a downtrend, but it's getting more volatile. That means it's probably going to end. That means the volatility will start to drop and you'll start to move up. If you're in a channel, that means you can continue for a while longer. Okay, and when it's after a big up move and you start to have a broadening, and they say it's getting volatile, it usually means it's going to be bearish. Okay, so we are in fact broadening, and we just run our key level of significance, and this was quite a big buyback on this candle. So it's nothing to celebrate the buyback here, considering how much it gave up. Remember, it was 10-5-2-2 there, and it traded 4 in a very short time frame. So it was a spiller. It really was. That was a great head and shoulders. But all this means for the macro is that it's been extended. It's been extended. So what we actually need is we need a bit of calming, bit of basing, and then we go into our third impulse. So what's this done is where this might have been, let's clear this chart here, where this might have been, where it might have been the third impulse over here, it isn't. It clearly isn't. Clear the screen. Where this might have been our third that we were looking for, it clearly isn't because it ran that low. What it means is that's still to come. So I was concerned about this low because this was going up and then it was turning down, and I was saying this is happening real quick. You know, we got our second here, and then straight away our first was over here on the left, and we're going, whoom, here we go, straight into this. And I felt this was something that was supposed to come in the lead up to the election and post the election, and I'm expecting Trump, as I say, especially if they run Biden against him. God's truth. I have no dog in that fight, but they'll want to crash it on him as the antagonist in chief. And white male conservative. Almost certainly I have a feeling that they want to crash it on him. So I would see this being 21, that the whole cure to this problem that they've created. Remember, 2008 started in 2007 first. I remember mid-year being in the property business and saying, I wonder if this Detroit and these bad loan things is going to become a big story. It had already started, it was simmering. Lehman's only occurred in 2008. There's going to be a twist in the screw in all of this. And that means a potential for further fear. And the fear is what drove this here. But what will pump both gold, silver, and Bitcoin is not the fear, it's the cure. Problem, everybody's reaction. Keep pushing the problem until you get a horrible reaction. Twist it. More pain, draconian laws, the most unthinkable things, and then something just mildly not so bad so that people actually think they got away with a deal. And there's the solution. And in that solution is money proliferation for green, for everything. And that is where all these things will begin their breakouts to the upside. So this cycle has just been extended. So a lengthy explanation to say actually all is in hand. At what point does it not become in hand? The run of that low. The run of that low ceases to be the upside HVF continuation pattern that we forecast. This, though, was a pretty flat, deep low. But many people will say, well, that's kind of very what we refer to as low slung. I want to highlight that when you do volume by price, there is negligible, and I do this in detail in the premium area, but there is negligible volume that occurred in these levels. Negligible. In other words, volume by price runs the histograms across. Maybe do a quick demonstration of it just to give you an overview. This, having not spoken in crypto, this might need to be a clarifying one of some length. So we look at this and you would go indicators. You can learn how to do this in drawing mode. Indicators, please. Volume by profile, and you just go here. Whoop, fixed. Do it again. Fixed range, volume profile. So if I just do a rough showing and capturing of the area, 70% of the volume occurred in this dark area. 70% is this dark area. Most of what's happening here, and you can see it becomes ridiculous at 12,000. There was no volume of any sort. So actually, if you were truly drawing this and you just said, let's forget the fluff, one or two idiots that just had to be in, they were paying any price, including $19,000 at the top of the market. The basic absolute participated with significant volume part of this continuation pattern looks more like something like this. And this is just blow off fluff on the tops. So that should give you a little bit less of a concern about the fact that this low is so close to that low. Well, the highs are not as far away as you think in terms of volume participation. Okay, just a concept and thought for you to think on there. Let's clear that screen and end the drawing. I will also remove the volume by price. We go into much more detail as to where you should place that in a program, how we use it with specific setups, and you can find out more about it. So that was your down break. We also say you regularly visit the axis of any broadening pattern. That happened there. You had your inverted head and shoulder. So now I'm going to drop in here a little bit and just do a quick read of how it all panned out. And you can see how the game was. You had your inverted head and shoulder there on a key level. Break target just made on that wick. You got a nice little squeezy Japanesey break that popped you onto the next level. You came down, you revisited it, just run. It was a key round number 8-4. You ran up to the head. That happened to be the high that coincided with that high. I'm on Gemini, so it's slightly different here, and it also coincided with where our active stop loss was on this inverted HVF that we traded to the south side. So then you have over here, quick draw. We can drop it maybe a little bit more time frame wise, go to the 8 hour maybe. I have lots and lots of different time frames, and you can see this head and shoulders in a slightly more obvious fashion. And it went something like this. There's your shoulder there. You go out the way now. Falling wedge, by the way, quite a nice little falling wedge. Sets up the bump for the move to the head. You get your bump, you pause, low volatility, kind of continuation, another leg up. You actually can argue you had, we spoke of a complex head and shoulder even up top here. You've got this neckline. We only do horizontal necklines. It meets the key level of 8-4, rising wedge, and you could have gassed out and shorted that right there on the break of the rising wedge. You could have had a stop over there. Switch the arrowheads around. You could have had your stop. Even that's too high. Command Z, there, just above that. That would have been a risk reward trade to boot. Not claiming it, didn't do it. Little continuation pennant. The spiller from Manila. Note how it's on our axis of our broadening pattern in the same way that this falling wedge is on the axis of our falling pattern. Let's go purple. There, that's on the neckline, and that little continuation on the dotted line that I drew. Then you come down right to the basement. You do that overshoot run that tests the 4K, and now you are where you are. Good. So what about right now on crypto? What about right now? So overall, my current view is that this was excessive and that there's going to be a slow basing recovery subject to how big the bed gets wet in the traditional market. I think most of the institutional money is out. So Mike Novogratz, I mentioned him. He said about Bitcoin, Jimmy Song, he's wrong about saying it's institutional. Market panic selling, not institution selling. That's what Mike has said. He's come out and said that. He said Jimmy Song is wrong. I don't know who Jimmy Song is. I kind of know a little bit, but I don't want to get into details with the personalities. Let's just play the argument, not the man. Novogratz, I disagree entirely. So why do I disagree? What have we got to say about that? Okay, let's go back up and look again at the bigger time frames. So I'll get the 4-day up here and let's talk some interesting indicators. I've got a lot of interesting to show you here. Okay, so this is called the Bitcoin COT indicator. In actual fact, it's in one of my favorites. Let's put him on straight away. Okay, so COT, commitment of traders. Now this always collects around futures markets. Commitment of traders, this is raw exchange collected data. In other words, you trade, you are an institution, or you are a professional trader, registered professional. That means you don't have the leverage limitations, you put up a certain minimum amount, you bought a seat, you've done whatever, etc. So let me just take some of the lines off there. That would be okay, that's who you are. Now I'm going to edit this indicator just to take a couple of lines off that are just a bit distracting, and we will leave out open interests here for now of the 4 largest, and we will just have these 3 lines. So what are these 3 lines? Dark gray, light gray, and blue. Okay, so once again, let me show you this. Dark gray is data collected. This is dark gray. Institutional trader network. Professional traders, light gray. Retail, that's you from your exchange, how you are positioned. Whether you are net long or whether you are net short. So let's be clear. In the sell-off from here, there was selling from institutions. There was selling from institutions. At our high point over there, institutions were net short and they sold off. They've only literally over this weekend, meaning that's 9th of March. So while we're here on the 13th of March, they're only now beginning to buy. They are at extreme short levels, institutions. This could make up miners, by the way, but in my view, you're going to have your home office that decided to get, a little bit more edgy, high-risk stuff in their usual traditional market products, bought some Bitcoin, hedge funds, organized group traders of Bitcoin, they will all fall in part of this. And they are net short. It's only changing now as they are buying literally as this data is coming back out. They are at an extremity right now, and it's another reason why in my suggestion I actually think this is a very unique plunge opportunity. That doesn't mean you're going straight to moon. Many people say he's calling a bull. No, what's happened is we've had an extended down leg, a little longer than we thought. That's going to extend the pattern. You're probably at a marginal low. You got a marginal low there. This was an exciting period over here. You were low, you went up a bit, you went back down a bit, you went up a bit, you went back down a bit, boom, you started to kick a little bit there. That was a whole bunch later, 30th of March, in comparison to while you were coming down, even that low, 25th of November, you made a slightly lower low. So there were months that went by without a great deal happening. So this has to build basing and has to improve and set itself up for further upside. So the COT data does not support that the institutions are net long. The COT data supports that they have been short. They've only recently, however, become accumulators. Now, the professional traders have got out, and the retail traders in the last few days, periods of these. This is a 4-day chart. So they were net long, and they would have been part of the flush out. They would have been part of the flush out. But institutions were coming into this net short and have only in the last 4 days literally begun accumulating. So you can argue they were they were pretty short. They were pretty short already. They were at their lowest ever point short when we were here. And they were going short from throughout this up move. They were increasing their short exposure throughout this up move. They were increasing. Look at the fall away from here to this low. So throughout this period, from here and down there, institutions were selling into the final rise into the top and into the beginning of that low, and some of it part of the way. So right now, near the end. He's not entirely wrong, because at this end point now, they have started to accumulate, but that's way down here. That's literally after what's happened in the last day or two. In terms of crypto. That's literally what's been happening in the last day or two. What I would also like to show you that's really, really interesting is another indicator that will show you where all the currencies that were involved on this. So institutions are now accumulating only now as of that point, this low here in the last period. They were net short. So if I take this indicator away now, just to leave that for a minute, and we wait for this other one to load on the Bitcoin FAT volume,